Alright everyone, welcome to the channel. So, the countdown to the next Fed meeting is here. We've got about 3 weeks until the next Fed meeting. There has been some news that has been broken on this in conjunction to the interest rate hikes that people think we are going to be getting coming up into the next Fed meeting. So, in this video, we're going to be talking about the countdown to the next Fed meeting. We're going to be talking about the likelihood of another interest rate hike like we saw back in May. We're going to talk about the news that is broken, and then we're going to head over into the charts. We're going to look at what happened the last time there was an interest rate hike, and then we can extrapolate based on previous trends what we think is going to be happening again if this happens. So let's jump right into the video. As you can see here, the Fed points to more rate hikes that go further than the market anticipates. And last week, Powell said in a Wall Street interview that it would take clear and convincing evidence that inflation was coming down to the Fed's 2% target before the rate increases would stop. Now, why is this so brutal? Powell says he doesn't even think that this is going to be coming into fruition until September. So they're talking about rolling out these increases in the interest rates all the way up until September. If you're unfamiliar with the effects of the Federal Reserve hike raises, then we're going to be talking about these towards the end of the video, but what you need to know for now is the next meeting is coming up in the next 21 days. The last time we had a meeting was coming in on the 4th of May, and we're going to show you what happened in the market when the Fed decided to raise the interest rates. But very interestingly, coming over to the CME group, looking at the news from what Powell was stating, he is getting backed by policymakers. There is a number of banks that are backing him with these interest rate hikes as well. But looking at this, the CME group, if you haven't heard of this before, this is the Chicago Mercantile Exchange, but they are predicting 100% likelihood that we are going to be having interest rate hikes coming up into the next month. And if we look at the probabilities, you can actually see they're predicting interest rate hikes literally for at least the next couple of Fed meetings, which is going to be absolutely brutal for the markets if they do continue with these interest rate hikes. Now, like I said, this might be your first time on my channel. You may have never heard of the interest rate hikes before. So let me just give you some information to help you process this if you haven't heard of this before or you don't understand it. Basically, the Federal Reserve increasing the interest rates means that it costs more money to borrow. So for example, if you were to borrow $100, if you were to do that last year, you probably wouldn't have had too much of an interest rate on that. For example, you might have been able to borrow $100 and you might have only had to pay back $100.50. When they're increasing the interest rates, they're making it more costly to borrow money. So the majority of millionaires, billionaires, and top dogs, they're very, very smart. They know how to avoid taxes, and that is by leveraging borrowed money because you don't get taxed on that. So what people like Michael Saylor have been doing is they've been borrowing money, they've been putting it into the stock markets. More specifically, Michael Saylor's been using that debt, leveraging it up and buying Bitcoin. What that means is less people like him, or even people like him, are going to find it harder to borrow money if the Fed increases the interest rates. Now, this is brutal for the markets. It just means that it's kind of like the opposite of inflation. They increase inflation, the money supply goes up. They increase the interest rates, and people are less likely to borrow. So it's kind of counterintuitive, or it counters what is going on in inflation. And if we look at what happened during the last Federal Reserve increase rate hike, you can see this was on the 4th of May. Now, for some reason, and I said this on the 4th of May when I did cover this, people thought it was bullish when the Fed increased the interest rates by 50 basis points. And if you're not an economist, 50 basis points simply means 0.5%. So 100 basis points would be 1 percentile point. They increased it by 50 basis points, which is a huge, huge height rate for the Fed to take. If you look at what happened on the 4th, like I said, for some reason, people thought this was bullish news, and I pointed this out when I covered this on the 4th. I said this is not bullish, so I don't know why people are jumping into this. But literally as soon, the day after the Federal Reserve interest rate hike, you can see we capitulated 33%. And from the last Fed meeting, we're literally down 25% since the last meeting. So what is going to be happening now? Because, you know, extrapolating this over, I don't know why I drew this. This is 21 days. We've literally got a Federal Reserve countdown tool here for the next FOMC meeting. You can see less than 21 days now, and we are going to be having the next Fed meeting. Considering the CME group, Powell, and a bunch of other policymakers are talking about increasing the interest rates, I would really not find it surprising whatsoever if once again they, you know, stood their ground and backed the interest rates one more time, at least one more time. I mean, if we look at the next couple of Fed meetings, you can see, like I said, this this vertical orange line on the chart, this was the previous one. This is the next one we're going to be expecting over on the 15th, and the one after that is the 27th. And like I said, looking at the probabilities, the Chicago Mercantile Exchange predicts that these next two FOMC meetings are going to have 100% probability of having an interest rate hike. So this is basically the next two meetings would encompass the next 62 days. And I think this really beautifully lines up with the fact that I've been predicting in the past couple of weeks, the past couple of weeks, that I think Bitcoin's going to move down to around about the 22,000 target. Now, if the Fed keeps on increasing the interest rates the way they are doing, bear in mind, Bitcoin has never been in a market scenario like this. There's never in the entirety of my life, obviously I'm a lot older than Bitcoin is, there really hasn't been this much of an abundant swing in the interest rates increasing. So coming into the next two Fed meetings, it does seem like the Fed wants to once again back it by another 50 basis points. This could be bleeding all the way into the 27th of July. Like I said, the next, what was this, the next 60 something days? 62 days. Absolutely brutal. So, like I said, it seems very, very likely. The probabilities are there. And as Powell says, you know, he doesn't suspect that inflation is going to subside enough until we come into September. And he says that, in his opinion, the Fed is going to continue increasing the interest rates coming into September. If you're going to take the word of anyone, you probably want to take it from the chairman of the Federal Reserve, which is Powell. So, like I said the last time, I don't want to do like a ton of TA on, you know, two vertical lines, but, you know, very, very simply, we're down 25% since the last FOMC meeting, and we're really just bleeding sideways at this moment in time. I honestly really would not be surprised if we did something like this, where for the next couple of weeks coming into the FOMC meeting, we kind of just lollygag, we go sideways and bleed into it. This being said as well, if the Fed does subside, the interest rate increases coming into the September FOMC meeting on the 21st of September. If we look at how far away this is, 118 days. This might be indicative that Bitcoin could be very, very boring for the next 118 days. In my opinion, I think it's going to be boring for at least the next 62 days. I really do hope I'm wrong. Actually, I don't hope I'm wrong. I really do like cheap Bitcoin, so I'd be very, very welcoming of a 22,000 Bitcoin. If we continue to capitulate into the next FOMC meeting, you know, we could even see retests of the previous all-time high around about 19 to 20,000. So very interesting stuff here. I will keep you updated. I will be making a video probably the night before and on the day of the next FOMC meeting, which is just under 21 days. So hope you enjoyed the content. As always, Cowboy out. Peace.